Hello, good morning everyone. First of all, let me introduce myself. My name is Ahmad Izulwaro, and you may call me Izul. I'm a student of Executive MBA class of IPMI International Business School in Jakarta, year 2020. Today, I would like to share you about my experience learning the introduction to corporate finance, an interesting class who taught by Professor Roy Sembel, PhD, the professor and distinguished chair for finance and investment. Actually, this online class was held on March 13, 2021. Okay, let's continue to the teaching material in this first week, which contains about introduction, of course, outline and assignment, context, and then investment simulation, and also time value of money. Okay, let's continue. As a part of management of the company, actually at least should consider about capital structure, and then about working capital management, and then asset structure, of course, and then also revenue management, and then cash management, cash flow management, and growth management, and the last but not least, risk management. And while we are talking about capital structure, we have to know that is the ways in which the company or the firm obtains and manages the long-term financing. It needs to support its long-term investment. It is the mixture of debt and also equity that a company uses to finance its operations. Question involve where and how to get the financing. The expenses associated with raising long-term financing and choosing among lenders and among loan types are among the most important issues to address. And the next one is we are talking about working capital management. It is something that related to the short-term assets of the company, such as inventory, and short-term liabilities, such as money owed to suppliers. A company's short-term assets and liabilities, of course, include current assets and current liabilities. Okay, next move to the context. Actually, the context of this corporate finance is talking about the corporation itself and financial market. The corporation, we know, is the entity that operating the business. Of course, there are some investors, at least one investor, and its secondary markets. So there are some correlation about these two entities, corporation and investors, like cash flows, securities, reinvestment, tax, etc. And when we're talking about tax, of course, we are talking also about government, because so many countries yeah, have taxes policy, and the corporates, of course, should follow these policies. And then the next context, there are 4 cornerstones of the corporate finance. The first one is about core of value principle. Value is driven by returns on capital and growth and also cash flows. The second corner is about conservation of a value principle. You cannot create value by rearranging claims on cash flows. The third corner is talking about expectation treadmill principle. The more investors expect of your share price, the better you must perform to keep up. And then the last corner is talking about best owner principle. A business's value depends upon its owner's capabilities, of course. And then the next chapter is talking about time value of money. You know that receiving $1 today is, of course, worth more than $1 in the future due to opportunity cost. The opportunity cost of receiving $1 in the future is the interest we could have earned if we had received the $1 sooner. We are talking about time horizon, today and the future. Yeah, this is part of time value of money. If we can measure this opportunity cost, so we can also translating $1 today into its equivalent in the future. We can call it compounding. And also, we also talking about translating $1 in the future into its equivalent today, or we can call it discounting. So, in other words, you can say that this is present value and future value. Okay, guys, that is the teaching material from the first week of Professor Roy Sembel class. Okay, please don't forget to like, comment, and subscribe. Thank you for watching. Bye. Have a nice day.